Good afternoon, investors. You are now on KleverStock with me, Madhavi, and I'll be serving you the midday roundup with the latest market updates from this morning up until now. And we're opening today's market wrap with an outlook that at the domestic front, Malaysian equities kicked off early trading on a firmer note as receding tensions in the Middle East drove down international oil prices, although overall market gains remained constrained by caution ahead of the upcoming U.S. Federal Reserve interest rate decision. The local benchmark FBMKLCI advanced 3.29 points to reach 1,715.6 in early trade, tracking an overnight surge on Wall Street where the Dow Jones Industrial Average added more than 500 points following reports of diplomatic progress in US-Iran discussions. Financial counters spread-headed. The morning advance led by Malayan banking Berhad, which climbed 6 cents to 10 ringgit 96 cents. CIMB Group Holdings Berhad rose 4 cents to 7 ringgit 80 cents. RHB Bank Berhad added 3 cents to 8 ringgit 47 cents, and AMMB Holdings Berhad advanced 4 cents to 6 ringgit 54 cents. Meanwhile, consumer giant Nestle Berhad extended its upward momentum, Malaysia positive, and the quarterly earnings surging 1.02 ringgit to 94 ringgit 68 cents despite the broader positive sentiment domestic. The semiconductor stocks remained under pressure due to the global shift away from technological assets. Malaysian Pacific Industries Berhad slipped 46 cents to 43 ringgit 54 cents. Unisem Berhad shed 8 cents to 4 ringgit 65 cents. And Franken Corporation Berhad dropped 7 cents to 4 ringgit 91 cents. Among the most actively traded shares, Tanco Holdings Berhad and Zin Synergic Group Berhad each gained 1 cent to trade at 27 cents and 22 cents respectively, while GIIB Holdings Berhad edged up a 0.5 cent to 52 cents. Market analysts noted that while easing geopolitical tensions provided temporary relief, investors are increasingly fixated on macroeconomic headwinds from the United States. In a market commentary, APAC Securities highlighted that the impending Federal Reserve meeting represents one of the most challenging policy deliberations in the recent history. While the consensus continues to favor the Fed keeping interest rates unchanged at 3.50% to 3.75%, market conviction remains fragile amid persistent oil-driven inflation risk, the brokerage stated. APAC Securities further pointed out that the weakening economic indicators are compounding market hesitation. APAC Securities said, adding to the uncertainty, the U.S. Consumer Confidence Index fell to 90.8 in July, below the consensus forecast of 92.3 and down from June's upwardly revised 92.2, reinforcing concerns over moderating economic momentum even as inflationary pressures remain elevated. On the commodities front, Brent crude futures for September delivery fell nearly 5% in the prior sessions to settle around $84 per barrel as geopolitical risks subsidized. However, prices subsequently rebounded to roughly $87 per barrel following recent U.S. inventory data that indicated shrinking stockpiles. Now we are moving on to local currency and foreign exchange. The Malaysian ringgit opened on a firmer foot against the US dollar today as market sentiment found support in encouraging economic assessments by the central bank and growing expectations regarding potential policy shifts by the United States Federal Reserve. At early trading, the local unit rose to 4.0880 or 4.0940 against the greenback, improving from the previous day's close of 4.0885 or 4.0930. Market analysts pointed to positive remarks from Bank Negara Malaysia Governor Dato Sri Abdul Rashid Ghaffar, who confirmed that the national economy remains well on track to hit a 4.0 to 5.0% growth target for the 2026, likely near the top end of the range with manageable inflation despite recent energy supply disruptions. Market observers noted that Malaysia's structural reform, momentum, economic management, and underlying fundamentals have provided the country with the necessary resilience to navigate external shocks. However, trading is expected to remain range-bound near-term as investors anticipate the upcoming U.S. Federal Open Market Committee rate decision. Bank of Malaysia Berhad Chief Economist Dr. Muhammad Afzal Nizam Abdul Rashid noted that the local note is likely to trade cautiously around the 4 ringgit 8 cent to 4 ringgit 9 cent mark. He highlighted that fresh economic data from the United States indicated softening consumer sentiment. Dr. Muhammad Afzal Nizam said the U.S. Conference Board Consumer Confidence Index came in lower than expected at 90.8 points in July against consensus estimates to 92.4 points. He added that following the release of the index, 2-year and 10-year U.S. Treasury yields dropped by 4 basis points to 4.29% and 4.61%, respectively, suggesting that the U.S. Federal Reserve may be inclined to keep the rate steady in the near term. Across broader currency markets, the ringgit exhibited a mixed to lower performance against major global currencies. The local note edged higher vis-a-vis the Japanese yen to 2.4945 or 2.4983 from 2.4948 or 2.4976 at Tuesday's close, but pulled back against the euro to 4.6538 or 4.6605 from a 4.6429 or 4.6480 and softened against the British pound to 5.4305 or 5.4385 from 5.4287 or 5.4347. Performance among regional peers was similarly varied. The regional ringgit eased against the Singapore dollar to 3.1625 or 3.1675 from 3.1603 or 3.1640. And it also dropped against the Thai baht to 12.1775 or 12.2016 from 12.1494 or 12.1681. Meanwhile, it remained virtually flat against the Indonesian rupiah at 226.0 or 226.5 and unchanged against the Philippine peso at 6.63 or 6.64. And now for some economic news. Bank Negara Malaysia has highlighted a growing disparity between compensation and output, noting that national wage growth continues to lag behind productivity gains. The central bank emphasized the pressing need to reform Malaysia's wage-setting mechanism, with particular focus on how adjustments to the minimum wage filter through those higher income employment tiers. Addressing the structural challenges within the local labor landscape, Bank Negara Malaysia Deputy Governor Dato' Marzu Nisham Omar observed that the domestic market still faces a deficit of high-skilled employment opportunities. Marzu Nisham noted during a plenary session titled "The Future of Investment," if you look at it, our high-skilled underemployment rate is still high, about 35 to 36%, competing in a fragmented world at the B&M Sasana Symposium 2026. Meanwhile, that 35 to 36% of our workers are working in jobs that require less qualifications than what they already have at the time. To address this systematic mismatch, the central bank official underscored that Malaysia must focus on attracting high-quality investments capable of generating sophisticated positions while simultaneously enhancing the overall chamber and readiness of the local workforce. We'll now take a short break, but don't go away. We will return shortly with corporate news and deals across Malaysia. Welcome back to the Media Roundup. Let's continue with some corporate updates. In a move that underscores its successful expansion beyond traditional manufacturing, Ecomate Holdings Berhad has secured a 13.4 million ringgit purchase order from construction and engineering giant Gamuda Berhad for software license subscription spanning a 36-month period. The contract was formally awarded on July 27 to Ecomate's 60% owned subsidiary, Progressive Computer Systems Sendrian Berhad. Under the terms for the agreement, Gamuda will utilize the software licenses to power its extensive design, engineering, and digital project management operations. The 3-year arrangement ensures operational continuity and seamless digital integration across Gamuda's large-scale construction and infrastructure ventures. The contract win highlights Ecomate's evolving business model, which has seen the company diversify from its core furniture manufacturing base into high-margin information and communications technology services. The strategic pivot allows Ecomate to tap into growing enterprise demand for specialized digital tools and infrastructure across heavy industries. From a financial perspective, the deal provides Ecomate with a clear recurring revenue visibility over the next 3 years. Management confirmed that the contract is anticipated to contribute positively to the group's net assets per share and earnings per share throughout the subscription term, reinforcing investor confidence in the company's long-term diversification strategy. Up next, we have commodity update. Global oil prices fell nearly 5% on Tuesday, reaching 2-week lows as a temporary pause in fighting between the US and Iran gave traders brief hope for diplomatic progress despite ongoing trade disruptions. Brent crude dropped $4.27 to $84.09 a barrel, while US West Texas Intermediate fell $3.35 to $79.26. Both benchmarks hit their lowest levels in over 2 weeks after falling roughly 16% over 3 days. Despite the temporary calm, disputes over the Strait of Hormuz, a crucial waterway for the 1/5 of the world's oil, remain unresolved and unsolved. While US President Donald Trump spoke of constructive talks, Iranian officials denied that formal negotiations were happening. Diplomatic efforts continued to stumble. Tehran rejected an Amani plan to manage the strait through the usage fees, proposing instead a temporary route control through the Iranian waters. Energy experts warn the price drop may only reflect short-term relief. Bob Yoga, director and energy futures at Mizuho, said the market understands the situation is a mess and is now trading lower because the two belligerent parties have not attacked each other in the past few days. Yoga noted that the shipping through the strait remains severely restricted while Iran-backed Houthi forces continue attacks in the Red Sea. Supply disruptions are mounting. Saudi Aramco shut its 400,000 barrel per day Jizan refinery following a Houthi attack and is considering new routes to deliver oil and Asia safely. Meanwhile, China has held direct talks with the Houthis to ensure safe passage for its ships through the Red Sea. Elsewhere, potential US talks on ending the war in Ukraine could eventually ease sanctions on Russia, bringing more Russia crude back to global markets. In response to the market uncertainties, OPEC's oil production has been paused. Scheduled oil production increases for 3 months starting in October. And moving on to today's major corporate developments and the deals across Malaysia. Swift Energy Technology Berhad has secured 17 million ringgit worth of purchase orders to supply electrical and navigational systems to energy and data center projects across Malaysia, Indonesia, and Myanmar. Cosmos Technology International Berhad, wholly owned subsidiary, Cosmos Instruments, has secured a 4.8 million ringgit contract from Air Selangor to replace mechanical water meters with electromagnetic meters. Ecomate Holdings Berhad, via its 60% owned subsidiary, Progressive Computer Systems Sdn Berhad, has won a 13.4 million ringgit purchase order from Gamuda Berhad for the renewal of a software license subscription over a 3-year period. Ramsol Group's Berhad indirect wholly owned subsidiary, Rams Fintech, has entered into a 2-year collaboration with CTOS Digital Berhad's subsidiary to expand the distribution of its Payday Now earned wage access to platform. Fable Favco Berhad's U.S. subsidiary, Fable Favco Cranes, has been named as one of the 15 defendants in a $52.5 million lawsuit arising from the July 2023 crane collapse in Midtown Manhattan, although the company stated its role was limited to supplying the crane. LYC Healthcare Berhad expects to miss the July 31 deadline to issue its financial year 2026 annual report due to additional time required by its newly appointed external auditor, with the company targeting to release the report by August 7 or its shares suspended from August 10. IJM Corp Berhad is seeking shareholder approval for the re-election of Group CEO Dato' Lee Chin Fai and 2 other directors at its August 27 AGM, while long-serving chairman Tan Sri Krishnan Tan Boong Sen is notably absent from the re-election list. And that's a wrap for Midday Roundup with me, Madhvi, on KleverStock. Thank you for choosing us, investors. Stay tuned for upcoming live stream programs.